Dividends, return on capital, dividend yield, distributions, dividend payouts, and qualified dividends. What are they? When the company returns money to you for being a shareholder. Today we are talking free money and explaining dividend payouts. Companies will generally pay the dividend out to the shareholder on a semi-annual, quarterly, or monthly basis. This is 2, 4, or 12 times annually. It's important to understand that the financial metric of a company's dividend yield can be changed by the company at any time. Stick around to the end of the video and see why this can be detrimental to your stock portfolio and a company that you're choosing to invest in long term. Today we are looking at Chevron Corporation, stock ticker CVX, and they are currently trading at $100 here. The two metrics we are looking at today are the forward dividend, which is the dividend payout, as well as that dividend yield. You can see that Chevron has a forward dividend payout of $5.16 and a dividend yield of 5.04%. Also, while I have this up, I'll turn your attention to the ex-dividend date of February 16th, 2021. This is the date that you need to own the stock by in order to receive the next dividend payout. If you have a position in Chevron and you sell out of your position completely on February 15th, then you will not be eligible for the next dividend. If you sell out of your position completely on the 17th, then you will still receive the next dividend payment even though you no longer have your stock during the payout period. The first financial metric that we're talking about today is dividend payout. This is simply the amount of money a company pays the shareholder annually for owning a single share of said stock. CVX is a company that pays out their dividend quarterly, so you will receive $1.29 4 times each year. The second fundamental metric, which is important to look at in regards to dividend, is the dividend yield fundamental metric. Dividend yield shows how much a company pays out in dividends each year relative to their share price. The difference between dividend payout and dividend yield is that dividend payout is a dollar amount while dividend yield is a percentage. Because dividend yield is a percentage, it allows this fundamental metric to be comparable between different stocks. For example, if you have a company with a dividend payout of $1 and they are a company with a share price of $10, you are receiving a dividend payout of $1 but a dividend yield of 10%. If you have a company with a dividend payout of $1 and a share price of $100, you are still receiving a dividend payout of $1 but you're only receiving a dividend yield of 1%. As you may have gathered from my example, the dividend yield is calculated by taking the dividend payout and dividing it by the share price, and then multiplying it by 100 to turn it from a decimal ratio into a percentage. Now that you understand the dividend payout and dividend yield financial metrics, I want to talk about what dividends mean for different types of companies. Generally, the more mature companies are more likely to pay dividends as they have more steady earnings and are established businesses, while newer companies with smaller market caps do not place the same level of importance on returning capital to shareholders because they take their money and reinvest it to further grow the operations. If you want more information on this, I have a great video comparing growth stocks to value stocks. I'll throw that up on the screen as well as link it in the description. Another fun fact about dividends is that companies in the utilities and consumer staples industries often have higher dividend yields. Other companies with higher dividend yields consist of real estate investment trusts, REITs, master limited partnerships, MLPs, and business development companies or BDCs. Although they often pay higher dividend yields, the dividends and distributions from these companies are often taxed at a higher rate. If you're not sure exactly what a REIT or an MLP is, and you don't know exactly what a good dividend yield to look for is for a company like this, I will have videos down below in the description explaining both types of these companies. Now, the thing you want to look out for when searching for dividend-paying companies are dividend traps. A dividend trap is a company offering a good yield, something probably higher than 5%, as the average market dividend yield is around 3%. But behind that yield, there is a company with either a flawed business model or management flaws that don't know what they're doing with their money, and the only way that they know how to attract shareholders to invest into their company is to just continuously give all the money back to the shareholders. This is troublesome because these companies have no growth potential and will eventually fizzle out over the long run. The reason dividend traps can occur are because, if you remember at the beginning of the video, I mentioned that a company can change their dividend yield at any point. So the company will raise their dividend yield sometimes to like 15, 18% in order to attract new investors. Once all these new investors buy shares of the company, they drop that yield back down towards 3 or 4%, something more sustainable, and then the new investors are stuck holding the shares. Now, dividend traps will do two things to your portfolio. First, it will leave you with the impression of safety, as you think you are going to at least see some sort of desired returns from this company that you invested into. And the second thing the company will do is destroy your capital which you have invested, whether that be through opportunity cost or eating up your buying power, as that dividend yield will drop over time. If you enjoyed this segment of Fundamental Fridays, where we look at a separate fundamental metric each week, please subscribe to the channel and turn the notifications on. Don't forget to smash the like button and leave me a comment down below letting me know if you've ever fallen victim to a dividend trap. As always, I'm Patrick Zimmerman. Thank you for your time, and have a nice day.